So welcome to our session. So today we are going to discuss AS10 revised, which is property, plant and equipment. When I say revised, it was revised in year 2018. So it has recently got revised as we know that why all these standards are getting revised, because many of these standards like AS2, AS10, all these are getting aligned towards Ind AS, so that those companies which are not following Ind AS should be following the accounting which is very, very close to Ind AS, right? So let's look at that what we are going to cover in this. So this standard actually talks about the accounting treatment for all the property, plant and equipment. When I say all the property, plant and equipment, what property, plant and equipment is, that's something which we need to understand. So property, plant and equipment are actually the tangible assets equipment are tangible assets which has life of more than 12 months, means they will be used for more than 12 months and are kept for either production, right? Are either kept for production of goods or services. Let's say if I talk about production of goods and services, what could be the tangible asset which is held for production of goods and services? Supply of goods and services. The first one was production of goods and services. Can we quickly get the example for these? Supply of goods and services, production of goods and services, and for admin purpose, and at last, or rental to others. So if I have a tangible asset which is having a life of more than 12 months and which is kept for either of production or supply of goods or services, production of goods or services, supply of goods or services, for admin purpose and for rental to others. We need to understand that what are the examples. So Joseph and Payal has mentioned, when it is production of goods and services, it is machinery, plant, my factory. What could be supply of goods and services then? And admin purpose, and at last rental to others. So supply of goods and services could be my trucks, aircrafts, which provide services, could be telecom towers, because they also provide services. They also supply services to the customer. And for admin purpose, office building, furniture, laptops, computers or anything. Now rental to others, if you know the example. Now what is happening in nowadays that if you have, let's say, Ola has given car on rent. There are self-driven car rental companies, Zoom Car. So these companies provide cars on rent. So all these nothing but the asset which are used for rental for others. Exactly. Bikes for Zomato, of course, is nothing but the asset which they are using for supplies. Right. So all these are nothing but the assets which have more than 1 year useful life, or either kept for either production, supply, admin purpose, or rental to others. When all these parts are satisfied, then the asset would be classified under property, plant and equipment. It will be classified under property, plant and equipment, and AS10 gives the accounting treatment or shows the accounting treatment for property, plant and equipment. It also helps the user to understand that what happens, what is the value, what is the cost we have incurred, which has been capitalized in property, plant and equipment, and at last, how the changes in such cost means how the changes in the value is impacting the financial statement. For example, let's say if I have purchased a building, that building will keep on depreciating over the period. So the value is changing. Or if we can say, if we have purchased the building and the value is going up in the market, or land value is going up in the market, appreciation. All these are the objective of the AS10, that they give the guidance to the user of the financial statement about the property, plant and equipment. Charan, land rental doesn't come under here. So land and building, apart from land and building rental, everything else will come here. Because rental, land and building get treated as investment property. It means I have surplus land and building, which I am giving it to somebody else on rent. That will be treated as investment property as per AS13, and we account for that accordingly. That doesn't come here. Rest all other assets which we provide on rent will be falling under here. So what we are going to look at in the property, plant and equipment, we are going to look at when to recognize the property, plant and equipment in the books. What are the criteria to recognize property, plant and equipment in the books? If recognized, what would be the carrying amount? Means whether it will be cost, or if cost, how much cost we have paid. We'll also talk about the depreciation charge, how we calculate the depreciation charge. We'll also see impairment losses. However, the impairment losses get covered, right? We'll just talk about that, how impairment losses get booked. However, the calculation of impairment losses, when to do impairment and everything, we see AS28. That guidance comes from the topic which is AS28. So, Saikat, AS10 is part of the overview of accounting standards, which is 3.2. So, hope we are clear that what we are going to cover. We are going to cover the recognition criteria, measurement. We are going to cover the depreciation part. We are going to talk about the disclosure requirement. We are going to talk about the impairment. So all these things are going to be covered under AS10. So let's move further that what is covered and what is not covered in AS10. So AS10, as we mentioned, talk about all the property, plant and equipment. It is applicable to all the PPEs. However, there are a couple of areas which are not going to be included under this. But those areas are, it says any biological asset related to agricultural activity. Now, what is biological asset? Biological asset are those assets. Biological assets are those assets which change their shape, their size with the life. For example, let's say animals, maybe cows, or plants. So animal or plants which fall under the category of agricultural activities. So animal and plant which fall under the categories of agricultural activities, they would not be considered not to be included as PPE. They are not going to be considered as property, plant and equipment because we have a separate guidance on the agriculture. So ICAI, or I would say Accounting Standard Board, is already preparing a new standard on agriculture. So once that new standard will come out, animals, plants which form or which comes under this topic will be sent out. Meanwhile, they are there in this chapter, but they are not going to be treated as property, plant and equipment. So agricultural activities. What are agricultural activities? We'll just look at after this. So one, not to be included in PPE, any animal, any plant, right, will not be coming under property, plant and equipment. On the other side, it says wasting assets also. This is one which is not to be included. The second one is some wasting assets. Wasting assets means again resources, natural resources, right? Natural resources. The natural resources will also not be covered under PPE. So when I say natural resources, so activities which I incur to get the natural resources or to find out natural resources will also not be covered under this. For example, let's assume Indian Oil, right, wants to explore oil reserve in the sea. So what they did, to find out the oil in the sea, it's not an easy process. You have to deploy so many assets, you have to take permission, you have to do research, you have to do lot many things. When you do lot many things to find out whether that place has the oil or not, so you incur lot many expenses. Whether those expenses, because the life of those expenses are going to be higher or the longer. Why? Because you are not going to get the oil in a few months' time. first you may take years to set up the machinery, to set up the process and everything. Second, you may have to spend 2, 3, 4 years to find out whether that place has any oil reserve or not. So for that purpose, we have the separate guidance for these activities which we do, which we call exploration and evaluation of mineral resources. That will not be covered under property, plant and equipment. So make sure that 2 items, agricultural activities, where plant and animal biological assets will not be covered under property, plant and equipment. Second, the wasting assets, all the resources plus any activities which we have incurred, where we have incurred the money, that will also not fall under the property, plant and equipment. Right? That will also not fall under the property, plant and equipment. But what it says other than bearer plant. So it means bearer plant will be covered here. Now first let's understand that what is the difference between the biological asset, which is agricultural produce, and bearer plant. So let me just give you one example. Biological asset, which is coming under agricultural activities. And here we have bearer plant. As I mentioned that biological assets are those assets which change its shape, size with passage of time or with its life. Now, what could be the biological asset? Biological assets are those assets which are generally livestock has been grown for harvesting. For example, let's say what we do with our wheat crop, what we do with our rice crop, what we do with sugar canes. We grow them and we take them or we harvest them and sell the same in the market. It means if you want to grow wheat, rice, sugar cane next year, so you have to grow the plant from zero, right? Means you have to do the irrigation again, you have to do cultivation, everything, means all the agricultural activities again. And you will grow the plant again. Those are the plant are having life of less than, these plants have life of less than 1 year, right? Or I would say just a season, right? Like wheat, rice, sugarcane, right? All these, which we are growing so that it can be sold in the market as plant itself or as the product itself. On the other side, the bearer plant, actually the trees which has life of more than 12 months and it produce agricultural produce, or I can say it gives agricultural produce year on year. Can you think about any plant or any tree which can produce year on year? We just have to maintain that. Once tree is grown, it is grown. Right? Once tree are grown, they are there, right? It will keep on producing the produce, or it will keep on giving the agriculture product every year. We just have to maintain that. We don't have to cut that again and plant it again every year. Can anybody think about the example of that? Can anyone think about the example of that? So I can give you an example. Mango trees, apple trees, right? Mango tree, apple tree, exactly. So Pritika, Harsh, right? I would say tea bushes. So for tea also, we do not plant it every time. It is there. We just pick the leaves of the tree, the tea, and convert that into the final tea product. So hope this is fine. What is bearer plant? What is agriculture produce? Now, why bearer plant is being considered as property, plant and equipment? Because tangible asset, which you can see, life is more than 12 months and produce goods. So it is actually meeting the definition of it is actually meeting the definition of property, plant and equipment. It works same as machinery. It works same as machinery. We just have to maintain the plant and it will keep on giving the produce. Whereas this one, the other side, these plants are not giving you output every year. Means they will get harvested and you have to grow them again. Now you may say that why livestock is also not covered here. Right? Livestock can also be part of this because they have longer useful life. For example, cows. Cows would be there, will give the milk. So that is again a produce. But they are not covered here. The reason is because the value of the cow, generally what happens is that the cows will keep changing their shape and size as the age grows. Whereas the bearer plant, once it has grown, it has reached to a level and it will keep giving us the produce, right? So hope we are clear up to here, right? So let's understand this thing again, right? I'll just break it into the parts. What was the definition of property, plant and equipment? Tangible asset used in production, supply of goods or services. Either kept for rental to others, other than land or building. Please make a note, other than land or building. Land or building which are kept for rental purpose will not come under it. And for admin purpose, my laptops, furnitures and everything. And the life is more than 12 months. If all these conditions are satisfied, my asset will be classified as property, plant and equipment. Otherwise, it will not be classified as property, plant and equipment if any one of the conditions doesn't satisfy. There may be a case, company has installed fire safety equipment. Company has installed fire safety equipment. Are these kept for production? Are these kept for rental to others? Are these kept for any admin purpose? Are for production, rental, or admin? Are these providing any of these? Means, are these providing any of these services or any of these areas where we can use them? Can we say my fire safety equipment be used for production or for rental or for admin purpose? Quickly, guys. Do you think that these are kept for any of this purpose? If these are not kept for any of these purpose, can we consider them as property, plant and equipment? If they are not kept for either production or supply, they are not kept for rental to others, they are not kept for admin purpose. So what we are going to do if we have fire safety equipments? Right? What we are going to do if we have fire safety equipments? So fire safety equipment will still be categorized as PPE, even though they are not meeting any of these purpose. Right? They are not meeting any of these purpose. They must be used for more than 12 months. But the thing is whether they are meeting these criteria so that we can recognize them as property, plant and equipment. If they are not meeting any of these, means they are not kept for any of these purpose, still it will be classified as property, plant and equipment. Why? The reason is maybe I am not getting the benefit from that directly. I am not getting benefit from that directly, but what will happen if I don't use or if I don't install these fire safety equipments? Right? If I don't install the fire safety equipment, what will happen? I may not get license to run the factory. So I need to get the clearance from the safety department, right, or fire department to ensure that I am taking all the precautions. Now, if I have to get the license and this is the requirement to have the fire safety equipment, without that I won't get the license. It means it may not be adding these things directly, but it is helping indirectly. If you won't install, you will not be able to run your factory, and that is one of the reasons it will not, or it has to be considered as property, plant and equipment. Right? It has to be considered as property, plant and equipment. Shiva, as you mentioned, Janvi, as you mentioned that for bearer plant, what would be the depreciation? We will apply the concept of property, plant and equipment only. Right? We'll apply the concept of property, plant and equipment only. That concept says, once we move on to that, at what value we are growing it. Not just seed, but water or any other thing which you have spent, all those things will be required to find out the value of the asset. Right? Shiva, if a company give lease of its land and building, want it to be property, plant and equipment? If company gives land, building, and land and building together on rent or lease, right? I am the lessor. Then this asset is mine. Asset will remain be there in company's book. Asset is not going anywhere. But the only thing is, it will not be considered PPE, which is property, plant and equipment. It will be considered investment property. It will be considered investment property. Accounting will be done in the same manner. Whereas the disclosures has to come as investment property. It will remain be there as my asset, and we are going to use that in the same. Right? So we have seen that safety equipments or any other equipment which is required to be installed to get the license. Unless I do that, I won't be able to run my business. So that is required. Vishwanath, CCTV cameras, of course, they will be required or they will be added as property, plant and equipment. Right? A chemical manufacturer may install the new chemical handling process to comply with environmental requirement for the production and storage of dangerous chemicals. These will be required to be shown, or these will be recognized as an asset, because without them, enterprise is unable to manufacture and sell the chemicals. So it means even though they are not contributing directly, they will be contributing indirectly in the business. So it becomes very, very important for them. Hope this is okay with everybody. Let's move further. Right? So we have discussed that biological asset should not come under here. Right? So biological asset should not be covered under this. Ankit, I didn't get your what exactly you are asking for here. So coming back here, biological asset. So as we mentioned, the agricultural standard is in development, right? So ASB is actually developing the agricultural standard, right? Which will cover accounting for livestock and other areas, right? Livestock and other areas. So it means till the time that standard is not covered, what we are going to do, the living animals, just till the time they are not coming up with that new standard. Till the time they are not coming up with that new standard, those assets, those living animals can be treated as property, plant and equipment if definition meets. Or I would say will not be treated property, plant and equipment if definition of property, plant and equipment doesn't meet. Right? So you can again understand Like, for example, let's say a race course, right, may have horses. Now, with these horses are actually generating money for them. These horses are providing maybe the gambling services, not in India, but some other countries. Then in that case, these horses would be considered as my asset. Similarly, cow would go in the agriculture standard, but till the time it is not been developed, we can consider cow as property, plant and equipment if it meets the definition. Just till the time, not every time. Right? Whereas plant, only breeder plant will come under AS10 and it will remain under AS10 even after the standard has created the agriculture. Seed of plant will it come under AS2 valuation. So seeds will be considered as inventory only, right? I hope everybody is clear with the concept here. Up to this point, is everyone okay? What is the definition? What is covered? What is not covered here? Now, bearer plant we have already seen. Bearer plant is nothing but is used in the production or supply. Basically, it is producing the agriculture produce. Like mango tree giving us mango, right? Expected to bear produce for more than 12 months. It means they are going to give us mango year on year, right? Not necessary it will be harvested after 1 year. And has a remote likelihood that in fact the whole plant is getting sold. Right? Whole plant is getting sold. We are not going to do that. I am not going to cut my mango tree and sell it. Just because it can give us mangoes for years to come. And when this is happening, what it means? It means that this bearer plant is actually working like a machinery. Right? It is working like a machinery. And we are going to treat this as property, plant and equipment. So, pile in definition, all these things, tangible asset, right? Tangible asset, again I am going back, it should be tangible asset, kept for more than 12 months or meet any of these criteria, one of these criteria. So, it means tangible asset, condition 1 should be met with any of one of these, and condition 2 should be met as it has more than 12 months of life. Hope this is fine with everybody. Now there are certain items which will not be considered as bearer plant. Not to be considered as bearer plant. So plant cultivated to be harvested as agriculture produce. So I can take the example, let's say a paper manufacturer. Now paper get produced from trees. A paper manufacturer has grown trees which will be harvested not to produce any agricultural items, right? So I am growing trees so that I can cut them off and convert that into paper. When my objective is to cut the tree completely, not to grow any item there, or not to grow any produce there, in that case it will not be considered as bearer plant, because my intention is to grow that tree for its used or for its harvest, so that I can harvest that and I can use that for my paper production or furniture production, or I can sell wood logs to the market. When intention is to sell the plant itself instead of selling its produce, it is not the agriculture not the bearer plant. So you can understand tree grows for the use of lumber, right? Means the plant or the tree would be harvested and sold at in the market. Plants cultivated to produce agriculture produce, right? Whereas so plant cultivated to produce agriculture produce. However, it can also be sold and harvested later on, right? I am growing fruit, but with that plant I can use that plant for making the paper also, or wood logs also. That will also be considered as not a bearer plant. And at last, annual crops. So maize, wheat, rice, which we grow annually, means I have to grow again and again every time. So those will never be considered as bearer plant. So any plant which is going to be used for going to be harvested, right? And I am growing it to get or to harvest the same, so that I can convert that or I can use that for my production purpose. Those plants will never be coming under this. Will not be considered bearer plant. Okay. So I am just looking at some queries here. If livestock and other plant don't fulfill the condition, how and where they will be treated? So what is happening, Vaishnavi? As we know that right now, what they are going to be treated as, they are going to be treated as either the inventory or either the assets here. It means we will not be showing them as an inventory, but we are taking the guidance from the AS2, right? At what value we show these items at, right? That guidance will come from AS2 and AS10, which we have just seen, right? So which livestock can meet the definition of inventory and can meet the definition of property, plant, and equipment? For example, I have cows. Cows will be used, or cow will give the milk. So for the time being, it can be treated as, we can take the value as under property, plant, and equipment. Whereas if we talk about, let's say, chicken, right? So if you have let's say chicken with you, right? Where the company is in business of selling meat in the market. So they are not going to keep those chickens for longer period. They'll convert them into they'll harvest them and convert them into chicken and sell that in the market, right? So that's how we may consider that which one could be considered as bearer plant or the property plant and equipment, or which one would be considered as the other. If car is shown in balance sheet under fixed asset, then it is covered. So Dikshit, car now AS10 name earlier used to be fixed assets only. In 2018, this has got revised and name is changed from fixed asset to property, plant and equipment. Right. Okay. So annual crop, Harita, right? So Harita annual crops are nothing but those crops which we grow annually, right? Wheat has to be grown annually. Once it has grown, and I want the wheat to be means I want to take out the wheat grains. I have to harvest the whole plant which I have grown. But Tina, the thing is that, for example, let's say, if we talk about mango trees or apple trees, if you cut the apple tree, the next apple tree may take very long time to grow. And apple value would be much higher than the log value which, the farmer can get. So that is the reason they don't generally use all the assets or all the plants to produce fruit and lumber. Right? Some plants are only kept for fruit. Some plants may be kept. So, for example, let's say that once they reach a certain stage, we will cut them off. Right? So, those plants can be considered as fruit plus lumber. Right? Okay. So agriculture activity, what agriculture activity is, right? So when we were talking about agriculture activities, why agriculture or which agriculture assets we are talking about, which fall under agriculture activities? Now, which of these activities will be considered as agricultural activities? That is very important for us to know. So, agricultural activities are which are actually activities which is managed by the enterprise in the transformation of the biological asset, right? Right, in the biological transformation. If I am not having any activities involved, if I am not involved, or if company is not involved in biological transformation, then it will not fall under the agricultural activities. For example, let's say if I have cows, right? If I have cows, for example, Patanjali, they claim they have thousands of cows. If they have cows, what they do? What they do with those cows? How they maintain those cows? How they are helping in biological transformation? How they are helping in biological transformation? Right? Company is taking care of or is managing the biological transformation. Whereas on the other side, right? On the other side, so Richa again, Chicken which produce eggs. Let's say chicken farming. Or poultry farming will also be covered under agriculture activities. And we need to see whether those chickens, what is the life of those chickens and everything, right? So we have to consider that for the time being again, right? So once agriculture asset would be there, all these assets will move under that particular topic. So if we are involved in the biological transformation, if company is managing the biological transformation, if biological transformation company is not managing, for example, let's say a fishing company goes to sea and catch fishes. Now, do they have any role? Do they have any role to increase the number of fishes? Are they taking care of any activities to increase the number of fishes? Are they managing or are they doing any study how they can help in grow the number of fishes in the sea? They are not doing that. They are just going there to catch the fish and come back. For them, it is not an agriculture. It is not an agricultural activity. So companies which are keeping, right, which are managing the biological transformation, right, is management by an enterprise for biological transformation and harvest of biological asset, either for sale, conversion into agriculture produce, or into additional biological asset. As we mentioned, chickens can give eggs and they can form additional biological assets. Cows can give birth to the calf, can give additional biological asset. For conversion into agriculture produce, it means maybe I get milk from cow. That milk which I sell in the market is nothing but the agriculture produce. I think you are missing one thing here. We mentioned that living animal, it says, will not be applied or will not be considered under AS10 if definition doesn't meet. Right? So we need to see just for the purpose at what value you are going to record these assets. That is the reason we are just taking the guidance from property, plant and equipment. Right? Okay. Is this okay with everybody? Are we clear with the definition piece up to now? That what is covered under property, plant and equipment and what is not covered under property, plant and equipment. Right? So that is very, very important here. So once we get to know that whether it is my asset or not, then from there on, I will keep or I'll record everything as property, plant and equipment. Means once the asset is known, then the guidance of property, plant and equipment will be applied. Sakshi, agricultural activities not to be included in AS10. However, it says that if living animal is there, which could be considered as biological asset under agriculture activities, but it meets the definition of PPE. We can get the guidance from property, plant and equipment to record the value of that. Right? Now what could be the definition? It is giving us produce, maybe milk, right? Maybe milk, and it is having the life of more than 12 months, and these are tangible, right? So we can apply the concept of property, plant and equipment. Yeah, so I am getting a lot of examples, whether donkey, lion, and cow dung is how to treat that. Maybe I think that these are not relevant for here, but yes, apply whatever way you can see here, right? So can we consider them as property, plant and equipment or not? That's something. Apply your concept of property, plant and equipment. Apply the concept of the living animal which we have just seen. What to do with that, right? Okay, so once we have understood the concept that which could be considered as property, plant and equipment, now question comes up: when to recognize property, plant and equipment in books, right? For example, we have spent money on something, right? We have spent money on whether those items on which we have spent money can be considered, can they be recognized as PP? For that, first thing, check whether definition of PP meets or not. I will just give one example here. Let's say I have an apartment. Whether this apartment will be considered as PPE or not. I have an apartment, I have a flat. Whether this flat will be considered as property, plant and equipment or not. Can we consider this apartment as property, plant and equipment or not? Or I have piece of land. Can we consider this piece of land as property, plant and equipment or not? So Bajrang, as I mentioned, if it meets the definition of PPE, then consider them as property, plant and equipment, right? Because you are going to get the guidance from here that they are the asset. They will be considered as the asset in the books, but at what value, right? So we are going to record them under property, plant and equipment for the time being. That's it, right? As I mentioned, right? Yes, Jagrati. Right. So whether an apartment be considered as property, plant and equipment, for that I need to see whether it meets the definition or not. What is the purpose of this apartment? For example, company has kept this apartment for their employees as a guest house, right? If company is using this apartment as guest house, then we can consider this as that it is meeting the definition because it has been kept for admin purpose. It is kept for admin purpose and meets definition. When it meets the definition kept for admin purpose, then we see whether it is meeting recognition criteria or not. And what is the recognition criteria? Recognition criteria is that asset will give economic benefit, right? So it is probable that future economic benefit will flow to the enterprise. That is the first criteria. I have purchased an asset. From that, future economic benefit will come to me. So this is an assumption also. When you buy anything, you will always understand, or you will always try to estimate, or you try to make an analysis that whether that future economic benefit will come or not. So we create an assumption that yes, if I am buying something, definitely it will give me future economic benefit. If it is going to give you future economic benefit, the second criteria we look at whether cost can be measured reliably or not. Cost can be measured reliably or not. So it means whenever you are buying an asset, you know how much cost is going. And you know that future economic benefit will come to the end. But in case you are not sure whether future economic benefit will come to the entity or not. For example, let's say you have purchased a land, right? You have purchased a land, but that land got acquired by the government, right? By the government for some general purpose, right? And they are not giving you any compensation also. Land got acquired by the government and not giving any compensation also. So you are not going to get any benefit. I am taking very hypothetical example. Generally, the government, when they acquire, they pay you something, right? Let's assume if they are not going to pay you anything. If they are not going to pay you anything, what will happen? You will not be recording this as an asset. You will de-recognize that because no future economic benefit will be coming in. Jayanti, if apartment or land used to give future economic benefit enterprise or not, then only we will categorize as property, plant and equipment. So we should get the future economic benefit, means company would get the benefit. Only then we are going to recognize that. And we look at this recognition criteria initially as well as subsequently. Now, if we just talk about few examples here. I have purchased a building. Will it be my asset? Can I recognize this building as my asset? Yes, of course, Vishnath. It will be property, plant and equipment. All the tangible assets which are held for production, supply, admin, right, and has a life of more than 1 year will be used or will be treated as property, plant and equipment. Now, coming back to this, I have purchased a building. Will this building be treated as property, plant and equipment or not? Will it be my property, plant and equipment or not? Right? I have purchased a building. Will this be treated as property, plant and equipment or not? This is PPE because it meets the recognition criteria that future economic benefit will come. And cost can be measured reliably. Now, can you think of how we will get future economic benefit? How we are going to get the future economic benefit from this? Right? How? Everybody is saying, right? But how they are going to give the future economic benefit? I think Joseph has mentioned how they are going to, or how we can get the benefit out of this building. What will I do to get the benefit out of this building? What all can be done? Either I use this for factory, which is for the production. Either I use this for office, which is for admin purpose. Either I put it on rent, right? Future economic benefit will still come. Now that will fall under the investment property, but the recognition criteria of all the asset is same. So future economic benefit will come if I use it or if I sell it. Right, Joseph? Either I can use the asset or either I can sell the asset. It means I can get the future economic benefit by any of these. So it means the criteria of future economic benefit is met. Cost can be measured reliably. If I buy the asset, I definitely know what is the cost. So it means initially, first time when I purchase the asset, initially criteria satisfied. Now let's look at subsequently. Subsequently means once I already have that asset, and that asset can now be or should now be subsequently. Now subsequently what I have done after initial recognition, I have added one more floor on this building. I have added one more floor on this building. This is subsequent. This is subsequent expenditure. Means when I have added one more floor, I might have spent some money. 10 lakh, 20 lakh, 50 lakhs, whatever the amount is. Then I check again one thing. whether future economic benefit will be there and cost can be measured reliably. Can I add the amount which I have spent? Let's assume rupees 50 lakhs. Can I add this 50 lakhs in the value of building? Can this be added? Is it going to give me future economic benefit? Can cost be measured reliably? Cost, I already know that I have spent 50 lakhs. So yes. Right? What about the future economic benefit? Once the extra floor has been added, it will definitely give the extra future economic benefit. When it gives the extra future economic benefit, it means it is going to be added in the value of asset. So it meets recognition criteria subsequently. Hope this is fine with everybody. I take another example. On Diwali, I have got this building repainted. So generally we get the building repainted around Diwali time so that it looks new, right? Now the question comes up again. If I got this repainted, I know what is the cost because I have paid the amount. But what about the future economic benefit for the repaint work which we have done? So initially we are clear. Future economic benefit and cost can be measured reliably will always be there. Right? Will always be there. Subsequently, we will see the amount we are spending, what kind of amount it is. Yes, yes, Chiran. It could be direct, it could be indirect. So future economic benefit means that any benefit which we are going to get. Now, can benefit or not? Now, future economic benefit in this case, before discussing this, I will just like to tell you one thing, that which cost we incur subsequently, which should not be part in property plant. Those costs which should never be added in the property plant and equipment. Subsequently, which are those costs which should never be added in the property plant and equipment? Day-to-day cost of day-to-day cost which we incur, right? Which we incur on property, plant and equipment. So day-to-day cost would be generally repair and maintenance. Repair and maintenance cost, which is there. So repair and maintenance cost or day-to-day cost, which we call, should not be added in the value of asset because generally these are the costs which are not going to give the future economic benefit. These are required to maintain my business, to maintain the asset. The annual maintenance like the AMC we pay. annual maintenance charges. Right? I get the cleaning done. I get the oiling done. Right? These are the expenses which I am doing on my machinery. These are the expenses which I am doing on my asset. But are these going to give me benefit in the future economic benefit? For that, we need to see whether repaint of the building is a maintenance expense or is it an additional asset which we are adding to the building. So that would say generally repaint would be considered as the maintenance part. I am doing the maintenance annually. When I am doing the maintenance annually, this is not going to be added as the future economic benefit. That is the regular expense which I am incurring year on year to maintain my asset. So the amount which I have spent on repaint, that repaint, instead of adding it as asset, it will be charged off to profit and loss account as expense. Is that okay with all? So as per the guidance, all costs which are day-to-day in nature or regular maintenance in nature, that will be charged off to P&L. Rest everything we are considering that they are going to give us future economic benefit and we are going to add that. Right, Rosalind. Exactly. Right. So we can understand the concept that yes, this is a kind of maintenance instead of kind of asset value. Hope this is fine with all. So, but we have seen only day-to-day maintenance will be charged to profit and loss account. The rest all will be capitalized, or I would say added in asset value. Right? So this is okay with everybody. Right? So one, it is probable that future economic benefit will come. Second, cost can be measured reliably. But if you remember, we have seen one concept. We always considered only material item. Any non-material item, company can decide to charge it off to profit and loss account straight away. Right? For example, any item of less than 5,000, right? Any item of less than 5,000 which company has purchased, it may have a life of more than 2 years, 3 years. But the asset Shweta, there is no such asset which could be there. There is no such asset there which will give benefit today and will not give benefit later on. If that asset is there, it means it is not property, plant and equipment. So any item which is having value less than rupees 5,000, let's assume I purchased mobile phones for my employee. Value is rupees 4,000. It can work for 2 years, but since it is having less than value of 5,000 rupees, I consider this as immaterial. So Companies Act gives us the guidance that what could be material, what could be immaterial. So they say up to value of 5,000, we can charge it off to profit and loss account. Deepak, coming back to this, day-to-day cost which we are incurring here are revenue expenditures, rest all which will be added in the value of asset are known as capital expenditures. So you need to see whether you are going to add that in the value of asset. If yes, that is capital in nature. If no, that is revenue in nature, right? Hope this is fine, right? So we are talking about that non-material item will be charged out to the profit and loss account. Okay. Repaid expenditure is carried to profit and loss account. Okay. If machine needs any replacement, then Rosalind will be coming to that part. One important question for everybody: can humans be treated as property, plant, and equipment? I want you guys to answer first, then we'll come up here. Meanwhile, let's start with that. Can humans be treated as property, plant, and equipment? Or can humans be treated as asset? Then we'll come up here. So Jayanti, day-to-day cost means any day-to-day maintenance cost you are incurring. As I mentioned, that your car needs service, right? When you do service, after every 3 months or after every 6 months. So that service will be considered is a day-to-day expenses which is required to maintain your asset. Day-to-day doesn't mean that you are spending every day, right? We are considering that it is a regular in nature, right? So regular in nature means we are going to consider that as profit and loss account, because that is the expenditure which I am incurring on maintenance part, either adding the value, right? So service required on car, motorcycle would be day-to-day expenditure. Oiling in the machinery would be day-to-day expenditure. Small repairs, maintenance which is required. Let's assume my machinery need repair. Let's assume your AC is not working fine. Now, if AC is not working fine, what we will do? We are going to call the AC person, right, who can fix the AC. That is the repair and maintenance. These are regular repair and maintenance which is required, right? Now, what could be those maintenance or those repair and maintenance which are not day-to-day repair and maintenance? There are some repair and maintenance which are not in day-to-day in nature. So I give you an example. In aviation business, aviation means like Indigo, Go Air. So what they need to do, as per the rule, they need to overhaul their aircrafts in every 5 years. As per the rule, they need to do overhauling of their aircrafts in every 5 years. This is the rule. Now the question is, this is a kind of repair and maintenance? But is it day-to-day repair and maintenance? Are we doing this on day-to-day basis? We are not doing this as an day-to-day repair or maintenance. These would be maintenance which has the life of, I am not incurring that amount on annual basis. These are required after every 5 years. When these are required after every 5 years, what to do? What to do? This will be added in asset value. So it will not be considered or it will not be kept. Right? I would say again, regular maintenance, which is day-to-day maintenance, which are happening which are happening regularly over the period, over the year, we charge it to profit and loss account. But here, when it is again repair and maintenance only, but this is not happening regularly, this is happening after every 5 years in time. When it is happening after 5 years in time, right, it is happening after 5 years of time, that is something which we are, right, that is something which we are not going to record under profit and loss account straight away. Hope this is okay with everybody. Right. Now, coming back to this point, first let me just see what everybody has answered. Okay, Harita, tangible. We are tangible. Everybody can see us, right? Okay. So if I just ask you, right, if humans are, what is the difference between human and machine and an animal? Right? What is the difference between human, machine and animal? Basically, if we talk about a machine, it is in company's control. Control means if company wants that it should produce 100 units, it can produce 100 units. Company wants, right? Company wants they should produce 1,000 units. Depending on the capacity and everything, it can produce 1,000 units also. Similarly, I have the animal, right? So whatever, if I want to sell the animal, I can sell that, right? Whereas it comes on the human, right? So whatever we want them to do, for example, management may ask them that you have to stay here for up to 6 p.m., up to 8 p.m., they may stay. But the only difference which comes up is machine and animal, they can't resign. Means today I have a machine. Machine cannot say, right? Machine cannot say that I don't want to work here. Right? Machine will never say I don't want to work here. Animal cannot say I don't want to work here. But it means that they can't control over these. You have control over these. Whereas when we talk about humans, on humans, we don't have control. Control, here I am not talking about that your boss is asking that you have to stay here up to 10 p.m. and you can't go anywhere because your boss has asked. That is not the control. I am talking about control that tomorrow you get a better job or tomorrow you get a better boss. What you would do? You would resign and you would go to some other company. It means The benefit which company believe that you can bring in 10 years now is gone. So that is the reason when we do not control humans, right? When we don't own humans, we don't control humans. That is the reason they are not our assets. Hope I have answered the question. Humans cannot be treated as asset. Except one case, which somebody has mentioned earlier, except one case in football clubs in Europe, America, right? What they do, they buy and sell players. Only in their case, humans can be treated as asset, as in right, intangible assets. But all other places, humans can never be treated as asset. While if employees are under contract, there is no contract which can bind humans, right? As per the law, you cannot bind anybody, right? So we are not bonded labor now, right? So you can consider at the time when people used to buy people, right? So one person can buy another person and keep him as the slave or the bonded labor, that they cannot leave without the permission, right? Or it can be sold to somebody else. Right, till that time, right? So you can say it could have been considered as the asset, but now it cannot be, right? Because there is no law which can say that you can bind any human. So Saurabh, for that purpose, how to value the calf is going to be coming from agriculture, whereas in this case, calf has come for free. Right, calf has come for free. So generally, from this particular standard, you may not be able to record the calf in the books. But once agriculture standard will come up, then it will be easy for us to recognize the value of that. That is the purpose the agricultural new standard is coming up. However, in this standard, you cannot recognize the value because it has come for free. So humans are not asset, okay? And don't feel bad about it. So you are asset for your company, but not the asset which you can be or you cannot be sitting in the financial statement. Yes. So yes, Ankit, football clubs actually buy or sell the players, right? IPL, we do not acquire the right for 1 year only. If you know, we are paying fees for you to play. Whereas in football clubs, they are allowed to sell, one club can sell the player to the other club, whereas it never happens in IPL, right? So IPL has a different format, right? So it will not be considered. Okay, so coming back to the question, Entity A is a supermarket chain, is renovating one of its major stores. The store will have more space for its store promotion outlet after the renovation and will include a restaurant also. Management is preparing a budget for the year after the store reopens, which will include the cost of remodeling and the expectation of 15% increase in sales would be there from the renovation, which will attract new customer. This remodeling means the renovation which we are doing, will this be considered as a capital expenditure or revenue expenditure? Means whether it will be a day-to-day repair and maintenance or it is adding a separate area altogether. What to do in this case? Whether we are going to consider this in our property, plant and equipment, or we are going to consider this in, right? Or we are going to consider this in our profit and loss account. So Deepak, Ankush, good, right? So the remodeling, because this is not a day-to-day expenditure. We don't do renovation every day. So it will be considered as property, plant and equipment. Right? I think Rosalind has given the best answer. We are the asset of our parents. Exactly, Rosalind. So I think we have understood the concept of humans to be considered in the books of finance, means in the financial statement of, right? How we are going to consider, and means why we should not consider human. That is clear to us, right? Okay. Now coming or moving further, right? Spare parts. So if you remember in AS2 we discussed that spare parts are of two types. One, right? One which is maybe general spare parts, right? General spare parts which can be used with any machine. It is not very specific to any particular machine. For example, nuts, bolts, and everything are the spare parts which can be used anywhere in any machine, right? Which can be used anywhere in any machine. If these spare parts can be used anywhere in any machine, then in that case they would be considered as inventory. We will follow the guidance of AS2. Whereas if spare parts are very specific to a particular machine or asset, right? Particular machine or asset. For example, let's say I have started a glass manufacturing unit. I have started a glass manufacturing unit. In this unit, I have machinery which has a boiler. Now in glass manufacturing unit, it is to be said that glass manufacturing unit, when we have the unit, it should continue to operate throughout the period. It should never stop. Now, if it should never stop, the vendor has given me, or I have purchased, extra boiler. Right? Extra boiler, which I am keeping as spare part. Why spare? Because in case this boiler, the first boiler, right? In case anything goes wrong with first boiler, at least I can replace it with the spare boiler and I can use that. So this boiler which I have in the spare is specific to this machine. Now if it is specific to this machine, it means that this boiler, this spare boiler, I am not going to consume that in a period. It is going to stay with me for more than 12 months. And it is held for the purpose. I don't know when it may be required. So when it is held for the specific, when it is going to be used with the specific machine only, then, and it has the life of more than 12 months, it means this extra boiler which we have meets the definition of PPE and will be classified under AS10. Is this okay with everybody? So it says if they meet the definition, AS10. If they do not meet the definition of PPE, as I mentioned, the nuts, bolts, right? All those which doesn't meet the definition of PPE, they will be classified under AS2, which is inventory. Okay, so I think some people are not accepting that people are not human. So I would say let's go with this thought that we are asset. Of course, we are asset. Asset for our financial statement or not? That is more important. We are not asset for our financial statement. Pile, again, I can tell you, right? So what happens in case of a chartered accountant firm? Let's assume you know accounting standards by heart. You are the best resource for the CA firm. Anything which comes up, they come to you to ask the question. And they feel that if you are staying with the company can earn crores in years to come. So you are the biggest asset for them. But let's assume another chartered accountant firm wants to hire you. And you have decided, being human, we can go to any other firm or we can follow our aspiration. You decide that I want to start my own firm. When you decided that you want to start your own firm, what will happen to the firm which you were working with? It means they are not going to have the same amount of service which they were getting right now. You are not the machine, right? As I mentioned, machine can never resign, right? Machine, if I know that machine is going to run with stay with me for 10 years, it will there with me for 10 years. But I cannot say that for the humans. That is the reason, right? Otherwise, they are the asset. Right? Okay. So treatment of subsequent cost, which we have already discussed. Cost of day-to-day servicing, day-to-day maintenance are going to be considered as repair and maintenance. And we are not going to record them under property, plant and equipment. They will be charged to profit and loss account as and when we incur it. Right? As and when we incur the amount, it will be charged off to the profit and loss account. Right? Now, when you have taken the spare parts, there may be a case company might not have the spare parts. If company doesn't have the spare parts, what will happen? For example, let's say there is a replacement of part of property, plant and equipment. What happens? If we replace a part of PPE, what will happen with that? Are we going to add the value of that asset in the books? For example, let's say I have purchased a building having a life of 50 years. This building has a lift. Right. Kiran, I think we have, right. So let's go with the flow, right, and we'll understand. So Harita, specific spares. For specific spares, as I mentioned, meets the definition of. If it meets the definition of PPE, means if it is having life of more than 1 year, only then it will be classified as PPE. If specific spare life is already less than, right, life is already less than 1 year, it means it doesn't meet the definition. Okay, so this building has a lift. And life of this lift is 20 years. So I have purchased the asset, I purchased the building. Building is having the life of 50 years, whereas lift has the life of 20 years. Now what will happen after 20 years? Lift will be replaced. I will add new lift. This new lift will cost right. Let's assume we are in the period in the year which is after 20 years. So we are in the year in which we have to purchase the new lift. So we have purchased new lift for rupees 20 lakhs. Now what to do with this 20 lakh? Will it be a revenue expenditure or capital expenditure? Or I would ask, should it go to P&L or added to asset? If we have purchased the lift, this lift is getting replaced. The older lift is getting replaced with the newer one, and the cost of new one is rupees 20 lakh. What we are going to do? Right? What we are going to do? Since it is replacement, new asset is getting added. One thing, is it our day-to-day maintenance part? Are we spending money on day-to-day expenditure? Right? Is it day-to-day expenditure? Answer is no. So it means it would be added in the asset value. It would be added in the asset value. So my asset will increase with 20 lakh. Hope this is fine with everybody. Hope this is fine. Right? Asset will increase with 20 lakh. But let's assume another situation. You think? Same everything. Asset will be replaced and we will add value of 20 lakh. Same everything. But what happened? After 15 years, lift requires replacement. After 15 years itself, instead of 20 years, lifts require replacement within the 15th year only. If this require replacement within the 15th year only, again the cost is 20 lakh. Revenue or capital expenditure, of course it is the capital expenditure. It is to be added in the value of asset. Asset will increase with 20 lakh. Right? Asset will increase with 20 lakh after 15 years. But one thing we have to do more, one more thing to be done, that is the old lift which is there in my books, because it's supposed to get depreciated over 20 years. So in the 15th year itself, it requires a replacement. If it requires a replacement in the 15th year itself, there must be some value in the books. Let's say the old lift value in the books was rupees 1 lakh. So asset will increase with 20 lakh, whereas the old asset which is there in the books will be de-recognized and it will decrease the asset with 1 lakh. So eventually my asset is going to get increased with 19 lakh, not to be the 20 lakhs only. So we are adding the value of new asset, but we are removing the value of older asset from the book, the same older asset from the book. Is that okay? In last question which we have taken here, if it was consumed for the 20 years complete, I feel that after 20 years that the lift value in the books would be 0. That is why I have not reduced anything here. But here after 15 years, it is not completely depreciated. So it means some value is there in the books that will be de-recognized. Right? So not just recognize, right? Not just recognize, you have to recognize and you have to de-recognize the older one. Right? So it says the carrying amount of those parts will be de-recognized. This is not impairment, Saurabh. We will discuss that impairment later, but this is not impairment. Right? This is not impairment. So hope this is okay with everybody, right? So one that I have to add the value of the new asset. At the same time, when I'm adding the value of new asset, I have to remove the value of the older asset. If I keep the value of the older asset also, it means even though the older asset has gone out, still the value is there. That is the logic of having the value replaced or value removed from the older value, right? So here we talk about some general examples like furnace, which may be required to be changed after specific hours in any particular industry. Aircraft interiors, let's say every aviation industry change their carpets, change their seats, right, after every certain time. So that is nothing but the replacement of parts, right? Hope this is okay with everybody. So we have talked about day-to-day maintenance. We have talked about replacement. of parts. The next thing which we have, so accounting treatment of old derecognition means removing. Accounting treatment means, if I talk about the entry, accounting entry, adding new asset means debit asset, credit cash. So 20 lakhs has been added, whereas on the other side the older machinery is getting derecognized. So credit asset, which is 1 lakh. But are we getting any money? If I am getting any money, that will be coming in cash or something. But if we are not getting any money, let's say that machinery is completely gone, that machinery is of no use, then it is loss on asset. So loss on asset debit, which will go to profit and loss account if we don't get any money. If we get any money, that will become. Right? So that is how we pass on the accounting entries. Okay, so day-to-day maintenance, replacement of parts, right, which we have seen. The other thing which we are talking about, maintenance, which is not day-to-day in nature. No, Ashwin, you cannot, right? You cannot do that, right? You cannot do that. Okay, Rosalind has asked a good question here. Let's assume a carpenter who use machine to cut the woods, right? Carpenter use the machinery to cut the wood, and they use a blade, the round blade which they use to cut the wood logs and everything. Now thing is that blade needs a replacement in after every 3 months, 6 months. Can that be considered as property, plant and equipment? Can that be added in the value of asset? Right? What should we do? One, that there must be a spare for that part, right? There must be a spare asset. Now, can that spare be considered as property, plant and equipment? Rosalind, I just ask you, right? Can you consider this spare, the blade, spare blade, which is there, which we need to replace after every 6 months? Will that be considered as asset or as property, plant and equipment? Right? Yes, guys. Please answer. Right? Can that be added or considered as the asset? Okay. So meanwhile, you answer that. Everybody answer that. I will talk about the major inspection and major overhauling. Exactly. Right? Exactly. So, Joseph, as you mentioned that 12 months criteria is not getting met. When 12 months criteria is not getting met, it is not the property, plant and equipment. Right? Okay. So, moving on to the next part where I said that maintenance is not day-to-day maintenance. It is major maintenance. So whenever company does any major inspection, major overhauling, right? Major repair. So whenever they are saying major inspection, major overhauling, major repair, these are not day-to-day expenses. When these are not day-to-day expenses, we have to add these in the value of asset. So let me just take one example here. Let's say Indigo has one aircraft for simplicity, right? Indigo has one aircraft. They purchased it for 100 crores. Indigo has one aircraft. They purchased it for 100 crores. Now this one aircraft which they have purchased for 100 crores, the life is 25 years. They can run the aircraft for next 25 years. After every 5 years, they need to do major overhauling. This will cost 5 crore after every 5 years. Right? This will cost 5 crore after every 5 years. When this is going to cost 5 crore after every 5 years, so what we need to do? Right? Because we cannot consider this as an expense. We have to consider this as an asset because this is not day-to-day cost of maintenance. So for that purpose, how the guidance will come up? Let's assume I have the aircraft which I purchased, cost is 100. Cost is 100. If I talk about the life of the aircraft up to 5 years, what would be the depreciation if the life is 25 years? What would be the depreciation? Depreciation for this aircraft. Depreciation for aircraft would be 100 divided by 25. So depreciation would be 4. So every year I will charge the depreciation of 4 and my asset value after 5th year. What would be the asset value? My asset value would be 100 minus 20, which is 80. Right? 100 minus 20, which will be 80. Now, on or after 5th year, I have done major overhauling, which I cannot expense off. If I cannot expense off, this has to be added, and the value is 5 crores. What would be the total value now? Total value of now, or total value of this asset now would be 85 crores. Right? Total value of asset now would be 85 crores. But what would be the depreciation next year? What would be the depreciation next year? Can anyone think about what should be the depreciation next year? What is the remaining useful life and what would be my depreciation next year? What is the remaining useful life of my aircraft? And how much depreciation I should charge for my aircraft? So if I tell you the life of this aircraft is remaining life of the aircraft, because out of 25 I have used for 5 years, is 20 years. Remaining life is 20 years. right? Life is 20 years. But my question comes up. What will happen to major overhauling? Are we going to do the next major overhauling after 20 years? Or what is the life of the major overhauling? The concept is the new concept which you might have not seen ever earlier. This is the new concept which you need to understand, that this time we have two assets within one asset. So there are two components in one asset. One aircraft which is having the life of 20 years. One major overhauling which is having the life of 5 years. Because at the end of 5th year, I have to do the major overhauling again. Then after again 5 years, I have to do the major overhauling again. When the life of these two assets or these two components separate, for calculation purpose, not for presentation purpose, for calculation purpose, my depreciation for the asset is, so for my depreciation for my depreciation for my aircraft would be 80 divided by 4, whereas depreciation for major overhauling would be 5 divided by the life right? 5 divided by life of the major overhauling. So it means, what is my total depreciation now in years 6, 7, 8, 9 and 10. So it would be minus 4 here, whereas minus 1 here for the next 5 years. What would be the value of this after 10th year? Value would be, this is coming as 60, whereas this is coming as 0. So 60 here, 0 here, and at the end of 10th year, right, again, the total depreciation also I deduct. So this is minus 5, minus 5, minus 5, minus 5, minus 5. So my value here would be 60, which is 60 plus 0. Now again, after 10th year, I will spend 5 crore again. So this 5 crore will again be added and my asset value will become 65 crore. So what is the entry? Entry is debit, asset, credit, cash. Okay, I'll just show. Is it fine now? Okay, thank you. Thank you. So I am explaining it again. So in year 6 to 10th, my depreciation for asset would be minus 4, minus 4, minus 4. Whereas on major overhauling, minus 1, minus 1, minus 1. And total depreciation minus 5. By doing that, after 10th year, value would be 60 plus 0 is this 60. And we have then spent another 5 crore. By spending 5 crore, my asset value will become 65. So what was the entry? Credit cash. Now, what would be the depreciation for year 11, 12, 13, 14 and 15? Again, the life is 16 years now. Sorry, 15 years now. So here the depreciation will remain be minus 4 every year. Whereas the life of this is minus 1. Oh, sorry, life of this is 5 years. So depreciation would be minus 1, minus 1, minus 1. Hope this is fine with everybody. Hope this is okay and fine with all. and we can understand the concept here. So my total depreciation again would be thing. Right? That is how we find out. That is how we find out the values of major inspection. Is that okay with all? Right? If it is okay with everybody. One question, in case enterprise, if it is not practicable for an enterprise to determine the carrying amount of the replacement part or replaced part, how the depreciation is negative? Where the depreciation is negative, right? So depreciation will always be loss. So that is the reason it is negative, right? So I am showing the asset value. The asset value after 15 years would be 40 and major overhauling asset value would be 0. Right? So again, if I just tell you, whenever we do major overhauling, in major overhauling, we consider that it will be added to the value of asset. But when it will be added to the value of asset, the life of major overhauling is not 20 years. It is just 5 years. So it means that for major overhauling, I have to calculate the depreciation separately. For the asset, we have to calculate the depreciation separately. And by doing that, we come to the total depreciation. Is this okay with all? Right? Is it okay with all? Right? So that's what happens when major or when the major inspection takes place. Right? So let's move further. Right? Let's move further and understand that what is going to happen further. So we have seen that what to do with the initial recognition, what to do with the subsequent recognition. Now we are talking about the measurement of the property, plant and equipment. At what value we keep our PPE in balance sheet? Initially means when we are first acquiring that, and subsequently when we have already acquired, and now every year at what value we are going to show that. So initially we just acquire or we just show the asset at cost. Cost means value we have paid to acquire the asset plus any other directly attributable expenses. Means value we have paid plus any amount which is required to buy the asset. Now, if you buy a home today, right? If you buy a property, what do you need to do? When you buy a property, let's say I bought a property for 1 crore, there is 1% commission which will be paid to the agent. So it means 1 lakh will be taken by the agent, which is required. Otherwise, you cannot buy the property. And 8 lakh rupees stamp duty. That is again required. Without that, you cannot buy the asset. So what would be the value of the asset? You paid 1 crore plus you have paid other items which are required. So 1 crore 9 lakh would be your value. That is initially. Subsequently, we follow the models. The models are known as either the cost model, which is the value here, the cost, initial cost minus depreciation. Right? Year on year, I keep it at cost minus depreciation. Or another model which is there is known as revaluation model. This revaluation model says that keep the asset value close to its fair value. For example, let's say you bought one land in Delhi, right? You bought one land in Delhi in 1990s. When you bought that, the price was 10 lakh rupees. But today, the value is 10 crore rupees. So at what value you are going to show when you are following a revaluation model? So it should be very, very close to 10 crore, which is right now the value of the asset. So it all depends. Both are available. Both are allowed. So that's something we will be discussing. Once we move on to the models. But before we get on to the models, first let's understand what goes under cost. What goes under the cost? If we understand that, it will be easy for us to define that what all values should go there. So as I mentioned, cost includes purchase price minus any rebates, any discounts, right? So purchase price which I am paying minus any rebates, minus any discount, plus directly attributable expenses. Now what directly attributable expenses are? Directly attributable expenses are those expenses which are required to bring the asset in current condition and position. Those assets which are required to bring the asset in its current condition and position. For example, we just discussed that if we are buying a property, I have to pay fees to agent, fees to legal person to buy the property, right? Because they have to do the paperwork. Without paperwork, property cannot be mine. So I have to involve the legal person. I have to involve the agent. Right? So fees to agent, fees to legal person, fees to architect. For example, you are constructing a building. Without involving architect, you cannot design the asset. Right? You cannot construct everything yourself. You have to involve the architect. So all these amounts which are required in nature will be added in the value of asset if they are required. Right? For that purpose, let's understand what could be the directly attributable expenses. Let's assume I have my employees who are going to directly work on that particular asset. their cost. For my labor, if my labor is working on a building, right, that labor cost will be added in the value of asset. If I purchase the land on which building has to be built, but land is not leveled yet, right? Land is not leveled yet. I have to get it leveled. Only then I can construct the building on that. So site preparation, right? Let's assume you have purchased a plot on on any hill station that is not leveled. First, you need to prepare that site so that you can start constructing the asset there, right? Initial delivery and handling cost. Let's assume I have ordered a machinery from Germany. Now that machinery, if it is coming, I have to pay the freight also, right? I have to pay the freight also, right? Harita, illegal fees to legal person. Yes, you have to pay, but you. I can't say on this thing where it's difficult to comment, but any illegal fees, there is no accounting for any illegal thing, right? How would you prove, right? How would you prove that you have paid anything to anybody? Let's assume you had paid some bribe to get your project passed, right? Now that bribe, you do not have any proof for that. So it can never be added, or it should never be added, or one thing, you should never bribe, right? So initial delivery and handling cost. For example, I ordered machinery in China. China would send the goods to me, or that asset to me. That asset would require freight to transfer the goods from China to India, right? The insurance which is required to transfer the goods, transfer the asset. Import duties, right? Taxes which are non-refundable in nature, right? Non-refundable taxes. Right? Non-refundable taxes. Any installation and assembly cost. Right? Cost of installation. Right? I got the machinery from China, but that has to be installed also. So for installation, I have called somebody else, or that vendor also providing the installation service where he is charging the separate amount. So that separate amount will also be added in the value of asset. All these amounts which we are talking about are nothing but the directly attributable, which are required expense. Harita, it will never be included, right? As I mentioned, that it can never come, right? You can never show what you have paid, right? Professional fees, again, professional fees which we have discussed. Fees to agent, fees to legal person, fees to architect and everybody. These are required. I cannot escape these ones. And at last, fees for testing. Right? So what we do, for example, let's say I bought the machinery from China and Chinese guys told me that my machinery can produce 1 lakh units per day with some certain quality. Right? They have said that it will produce 1 lakh units per day with some certain quality. Now, to ensure whether they are producing the same way or not, what I did test run to ensure that whether the machinery is working in the same manner as I wanted this to work. If this is working in the same manner or not, I do test run, and this test run require expenses, and we will add these expenses in asset value, because it is a required expense to ensure whether we are going to get the same output or not. So employee benefit is nothing but the amount which we are paying to my employee's salary, or any bonus which we are giving. So generally the labor who is working on my project, their cost will be added in the value of asset. Those who are not working on that project, for example, let's say my accountant is not working on that project. He is a general employee. Whether I construct this building or I don't construct this building, that employee or that accountant doesn't have to do anything with that. He will still be there with me. It means he is not directly attributable to this particular building. But my labor, which I am using for construction, they are only there till the time the asset is getting constructed. Once the asset is constructed, they may go out. Or I can say that I have only employed for the construction work. So whenever these things happens, we have to make sure that what exactly we are considering here, whether these are required expense or not. So as we mentioned, that cost of testing are also required expenses. So everybody, whatever we have discussed today, please go back and read all these things again, so that I can carry on from here, because after this we have examples which has to be understood. Right? We have the numerical examples where we need to find out the cost and everything. That we need to understand. Right? So one thing, I am just taking the last point, then we can close the session. Purchase price, any directly attributable expenses, and at last decommissioning cost. Decommissioning cost means for example, a telecom company has come to your house. They said that they want to set up a tower on your roof. For that, they will pay monthly rental. And you have agreed with that. And tower has been set up. The agreement is for 15 years. So you have set up, or means the tower company has set up the tower on your roof, on your terrace, and the agreement is for 15 years. But as per the agreement, after 15 years, what to do with the towers? What to do with this tower? After 15 years, what to do with this tower? What we are going to do if the tower is there, can this tower company say that we are not going to remove the tower? Whatever is there is yours now. You should remove the tower after 15 years, whatever happens. They can't. Means agreement may ask the telecom company has to remove tower after 15 years. It means they have to decommission. Decommission means removal. They have to decommission the tower. If they have to decommission the tower, there is some expense which would be required after 15 years. For example, let's say company has estimated after 15 years, 15 lakhs would be required to remove the tower. So what to do with this 15 lakhs which is required to remove the tower? What should we do? How can we treat that? As per the standard, this 15 lakhs present value, right? We will discuss that how to get the present value and everything. These 15 lakhs should be added to the asset value today, right? These 15 lakhs should be added to the asset value today. The answer or the logic is that you should understand the concept of decommissioning. What decommissioning is? Decommissioning means after the end of the useful life of the asset, you have to remove that asset. Values and everything we will be discussing tomorrow. So in our tomorrow session, we will be discussing everything. But the question is that what decommissioning is, that should be clear to all. I hope everybody is clear with the concept of decommissioning. So we will be discussing decommissioning in detail tomorrow, right? So purchase price, any directly attributable expenses plus decommissioning cost will become cost, right? So we are closing the session now. We'll continue from here tomorrow.